Hey, I have problems with my sound, so let's fix this. Um, so, hey everyone. So I was, reading the news, which is something that I do, and I saw a couple of articles that mentioned San Diego and the military, just because that's something that we have here. But the thing that I saw that was really interesting is that San Diego apparently has one of the largest military, either veteran or active duty military populations in the world. And we also have a lot of just like military bases. We have a lot of former military people who are working here. And one of the things that I started thinking about is, military people, either service members, buying houses, because there are special loan programs for people who decide to dedicate a portion of their life to serving our country. And we reward them with special loan programs because, well, I guess there's either less risk or it's more likely that they'll pay the money back, or I'm not exactly sure why we have these special loan programs. And I thought, what better person to come on than somebody who does most of their business as a VA loan guy? That's like literally his name, the VA loan guy. That's what he does with all of his time. So I asked him if he'd be willing to come on the show, and he said yes. And so that is who is going to be on our show today. And he's going to talk to us a lot about the VA loan, what VA loans are, why VA loans are important, and also reading about VA loans as I did before starting the show, I saw a lot of articles or a lot of people writing their blogs or whatever saying, well, you shouldn't be afraid of VA loans. And historically, a lot of people were afraid of VA loans, and VA loans were not considered desirable as compared to other types of loans. Obviously, a cash is always better than a loan because it's cash and it's money and you get it and there's nothing, nobody else really cares. But, is a VA loan really all that different from like a conventional loan versus a FHA loan or any other type of loan? So I wanted to bring on an expert who could answer all of these questions. And so that hypothetically and hopefully will help home sellers understand that VA loans are, just loans like any other loan, and there are no greater risks associated with VA loans as compared to any other loan. So that is what the VA loan guy is going to talk to us about today. And I will see you back right after this brief intro. All right, everyone. We are here with the VA loan guy, Jason Wood. Jason Wood is an Air Force veteran and he has a deep passion for the military. He began his career in the mortgage industry in 2001 and in 2011 moved to San Diego to further develop his career. Jason has helped over 2,000 families with their home financing needs and has been nationally ranked in the Scotsman Guide as a VA loan expert. And he was also ranked as one of the top military loan originators in 2020 and 2021 by Mortgage Originators magazine. He is a certified instructor with Military Mortgage Bootcamp, where he educates on the benefits of the VA loan to the military and realtor community. Jason is a member of the Disabled American Veterans, the Non-Commissioned Officers Association, and the American Legion. He is also an an owner of American Mortgage Network, with an acronym after there that I'm not sure how to pronounce, but I will ask him about that once I show back up on the screen. So, Jason, thank you so much for being with us.
Absolutely, man. Thank you for having me.
Awesome. Okay, so the first question that I'm going to have is, what was that AMNET ESOP that was after the parentheses at the end?
Yeah, so American Mortgage Network is our mortgage company. We call it AMNET for short.
Awesome.
American Mortgage Network is a mouthful. The ESOP is stands for Employee Stock Owned Plan. So, normally after a business name, you might see LLC or Corp after it. So ESOP is what our business structure is. So we like to tell people we are a real estate investment retirement trust that owns a mortgage bank.
Awesome. So I think that means that you as an employee or also part owner of the company actually care what happens with customers, because if customers are unhappy, you lose business, and that means that your ownership interest goes down in value, which is bad, as far as I understand it.
Yeah, that's a bad thing. Yeah. So yeah, we definitely, I mean, one of the beauties of the way that we built the company is it's 100% employee owned. So, you get that ownership mentality with the lion's share of the people who work here. So you get the extra care for the clients, you get the extra love for each other internally, and it just makes for overall a better lending experience for our clients and a better place of work for all of our team members. So it's been a model that's really helped develop our culture and impress our clients by doing a great job, because everyone cares and everyone's incentivized to get the deal done. And that's not typically the case in certain roles in most mortgage companies.
That sounds really helpful. And I've definitely worked with other mortgage companies where people are just like, well, this is just another loan, I'm going to deal with this when I get around to it.
Yeah. Or like, it's 4:59. I just powered down my computer. So I know your deal is important, but tomorrow we'll be here tomorrow and we'll deal with it then, and that's unfortunate, but that's the reality for most mortgage companies.
That's true. So that's really helpful. And it sounds like you work for an awesome company. You're also an awesome person. And I've, worked with you before, and you take very good care of your clients. So, one of the first questions that I have is, related to all of these non-cited articles that I talked about, where I've seen people say, some people are afraid of VA loans. So have you experienced that in your 2,000 loans?
I have. I have come across it more than you would believe, honestly. There are a lot of real estate agents out there that have a fear of the VA loan, and typically it's unfounded, and it's based on hearsay or rumor from someone else who they know that happens to work in their brokerage. And oftentimes what I find is the person who they heard it from another person who was licensed as a realtor for 35 years. And the last time they did a VA loan was 1987, or a deal with a VA loan was 1987. And it was a train wreck and horrible. And so they vowed to never do one ever again. And they tell everyone on the planet how terrible it is. And that's traditionally how we end up running into somebody who says, I don't like VA loans, or won't accept an offer with them, or etc. So I run into it quite a bit. In the San Diego market, it has lessened quite a lot, because we are surrounded, as you mentioned earlier in your opening, with so much military here, both active duty and veterans. It's a really huge presence, a lot of population here who are serving or did serve. So you can imagine that there's a lot of people, using that VA loan, and, the real estate agents have to have some level of acceptance of it. Maybe not comfort, but at least of acceptance. So I've run into it quite a bit. And that's honestly, it was interesting. I think it was 2012. So I had only lived in San Diego about a year, and I got invited to go to this kind of job fair on Camp Pendleton. And our mortgage company, had a little booth at this job fair. And of course we're, trying to excite people on using the VA loan. And I remember talking to a couple service members that happened to be passing by, and I was handing them out our little goodies. I think it was like a stress ball or something. And I was asking everyone that came by, hey, have you purchased a home or used your VA loan yet? And I had a few people stop and say, yeah, I did buy a house, but I didn't use my VA loan. I used the FHA loan. And so I said, wow, how come? Do you already have a house with a VA loan on it? Like, no, this was my first home. My realtor told me it was better. that I get an FHA loan. And it was more than one person that gave me that exact same reasoning. It was my realtor that told me not to use the VA loan. It was bad news bears, basically. Um, so when I heard that, it really kind of lit a fire for me. Having served in the military and used my VA loan and been in mortgages for a while, I knew how great it was. So it really kind of chapped me to hear that other real estate professionals were talking the military, active duty military members out of using this benefit. What I can tell you factually is the FHA loan is a worse loan and a more expensive loan for somebody than a VA loan or a conventional loan, if that's the comparison too. It is not the best loan. It's a good loan for the right situation. But 9 times out of 10, if you have someone that has an eligible VA loan status, the FHA loan is not going to be better than the VA loan. So that really kind of lit a fire under me, and I've gone further with that. And I'm, as you mentioned, one of my certifications is I'm a certified instructor with Military Mortgage Boot Camp, and that's a group of mortgage people similar to myself who, devote most of their energy towards, serving the military and have run into the same experiences, right, with clients or real estate agents who were not favorable on the VA loan. So they created an education system, and originally it started just in these two guys' state where they lived in Michigan, and it's expanded and basically created, a class around the VA loan to teach real estate agents, but we get the course certified by the state realtor association in the respective states. So California was one of the toughest ones, but they did get it approved in California, and I got certified as an instructor. So now I can teach this class on the VA loan to real estate agents, and they get 3 hours of continuing ed credit for attending it to renew their license each year. And I thought that was really an important step for me, not only for, growing relationships in business, but honestly, just for trying to change the narrative and make sure that people were getting fed the right information and not believing kind of the hearsay anymore.
I think that's helpful. So, what is some of the right information that people should know about VA loans?
Well, there's a couple things with the VA loans that are typically the highlights as far as myths or negative things. One of those is, they don't like it because they're under the belief that it is going to be a more expensive transaction for the seller. And that's false. That is not correct. There is a section in the VA handbook that delineates allowable and non-allowable fees in a VA transaction. However, the caveat to that is the allowable and non-allowable fees conversation, which is where people are basing this fear from, only comes into play if the lender charges a 1% origination fee. Years and years ago, especially when I started in 2001, charging an origination fee was super normal. And I was a mortgage broker way back then, and that was just a normal thing. Fast forward, now it's been 20 plus years. Most companies are mortgage banks, direct lenders, as we are, and even brokers still to this day don't really charge that 1% origination fee. It's a pretty rare situation that you'll see that. So effectively, just because the way the mortgage industry has kind of shifted with how they charge their fees, we have eliminated the allowable and non-allowable fees conversation from the VA loan. And that's surprising to some people because they didn't know the why behind those allowable, non-allowable fees to begin with. They just, again, heard kind of hearsay it's more expensive. The other thing that we hear often is that, well, I don't want to accept a VA because that VA appraiser is going to appraise my home low, or he's going to make my seller repair a bunch of stuff, and that's why we don't want to accept it. And there is a partial amount of truth in that fear, but where the partial amount of truth in that fear comes from is this. So appraisers that go out and appraise homes for VA purchases or refinance transactions are the same appraisers that would go out to the home and do an appraisal for someone using a conventional loan or someone using an FHA loan. This is the same appraiser. Just like as a real estate agent, and you know, Frantz, is as a real estate agent, you can get different designations behind your license, right? You can be certified in different, facets of real estate, whether it's commercial lending or property management or, military relocation specialist. There's other designations you can get. Well, same thing as an appraiser. You can get other designations, which then allow you to do different types of appraisals. So they all start out when they get their appraisal license able to do conventional appraisals. But for the other types, they have to get these designations. So VA is a designation, right? So they got to do a little extra education and they got to do a couple extra things when they are inspecting a home. So where the partial truth to that fear comes into play are what the VA calls its minimum property requirements. So the VA is not the loan for the fixer-upper home, because the premise behind the creation of the VA loan, and I'll go into a little history here so I can tie it together. So the VA loan started at the end of World War II, and it was Congress deciding they needed to do something for all the GIs coming back from, Europe and Asia that were fighting in the war. They needed to do something to help acclimate them back to being civilians, because so many of our men at that time were in the military and overseas in theater, that now the war was over. So they're all coming back, and we didn't need to have that large of a military at this point. So they had to come back and become civilians and do regular jobs and stuff. So they created the VA loan in an effort to provide our military with the ability to purchase a home with no down payment. And part of that was a home that provided them a healthy, safe haven for them and their family. Now that has translated into what we're talking about now, which is minimum property requirements. The minimum property requirements that spook a lot of sellers or real estate agents in this repair concern is when the appraisers go to the home to do their inspection. Not only are they taking photos and measurements like they would for any other appraisal and pulling comps just the same as they would for any other appraisal, they're tasked with two other things. They're tasked while they're there to make mention or note of any obvious signs of safety concern or health related concern. So if they see something in that home that presents a health or a safety issue, they're required by the extra designation they have to do VA loans, they're required to call that out. Now, per VA loans, that has to be repaired before we can close. So that's where this other fear or concern comes into play is, my seller's gonna have to make a bunch of repairs, or the VA appraiser is they always come in lower than conventional appraisals. And that is not true. In fact, in my monthly masterclass I host, every year I have an appraiser come on and we talk about that very topic. And I can tell you, every time I've had an appraiser on there, they say, hey, when I'm appraising a house and I'm looking for comps and trying to come up with value, like the loan type makes no difference in my work as far as figuring out what the house is worth. The house is the house, the comps are the comps.
Right. And so
financing doesn't change their viewpoint of how they come up to a value.
Right. And I'm kind of curious, in terms of these obvious health and safety hazards, like on the one hand, one question that I have is, would any other buyer potentially also care about these sorts of things if they were made aware of it? And two, what sorts of things do they care about?
It's a good question. I think a lot of buyers would be concerned on some of these things if their real estate agent brought it to their attention. And you and I know there are a lot of real estate agents, and a few of them are really good, and a lot of them are not so good. And
just like every other industry, just to be fair.
Yeah, no, you're completely same in the loan industry. But what happens is, you'll get the ones that either don't do a lot of business or the ones that just aren't maybe that practiced or that good at it, and so they may not be aware or see these kinds of issues, or they may not bring it to light because they just want to get a deal. They just want to get a commission check. That's their main focus. They're not really focused on doing the best thing for their client. And that happens. Sadly, it happens, right? So, yes, a buyer that's not using a VA loan would probably be concerned with the same things the VA loan is worried about for you as well, but it's not being highlighted or brought to your attention, so you may not be aware of it. But the things that are commonly found, especially in our San Diego area, for health and safety related concerns, the number one thing that I see, which is very simple to fix, is peeling paint on the outside of the exterior of the home. And a lot of people might think, well, what's the big deal? It's peeling paint, whatever, right? And at surface level, yeah, I kind of agree. But when you look at the reason behind it, well, the reason behind it is when the bare wood is exposed to the elements, now it opens up the opportunity for something to happen to the bare wood, right? Moisture can get in there, water can get in there. That can cause different things, right? Mold could be something. It could have some structural impact. Like there are reasons, what besides aesthetics, why you paint the wood, right? And one of it is to protect the wood from the elements. So that's a simple one that happens quite often. Another one that I see, especially like in the North Park area, is a lot of those older homes have have those really cool like front porches in the front of the house, and they were built a long time ago. And when they were built, they were built to code. And believe it or not, a lot of them haven't been renovated or updated, probably even sold in a long time. And now they finally come on the market, and you got this cool house in North Park and this awesome front porch, but there's no handrails, and the front porch is like 4 feet off the ground. And back in the 50s or whenever that was built, it was no big deal. Today, building codes have changed, and now when you're above a certain elevation over the ground, you have to have safety railings or a handrail or both. And so I see that like on homes in North Park. We got to have those handrails and stuff because someone could easily fall off. And if you fall 4 feet, you could break your arm or your neck or whatever, right? So that's a safety issue. Other things that we see, if there's an obvious infestation of termites, an appraiser can call that out. We're in San Diego. Termites are a thing. We on a VA loan, you got to get a termite inspection anyways. But the VA appraiser, if they notice that, or dry rot's another big one, those things can get called out. Some other smaller things that I see are a lot of home sellers, will do some DIY projects around their home, like all of us do, and that might range from painting the walls to replacing the carpet with laminate flooring, whatever, like pretty normal type, home upgrades that people do. But like the rest of us, life gets busy and your project gets like 98% completed. And you just didn't finish the last little simple thing because, well, you just got busy and then you decided to list the house and now your life's turned upside down because you're packing and you don't have time to finish putting the baseboard up. Or you painted, but you didn't have time to put the little cover over the outlet or the light switch, so like small things like that. Or you did the laminate flooring just in the hallways. You didn't really know how to make the transition piece between the hallway and the carpet in the living room. So none of that is earth-shattering, mind-blowing, expensive stuff. But they are items that will get called out because all of those present an opportunity for a health or safety-related concern, right? So while putting a switch plate cover over the outlets might be, a 39-cent item at Home Depot, and literally you need a screwdriver in about 40 seconds to put that on, right. It's not a big deal. It really is not a big deal. But if no one addresses it before the appraiser gets out there and he sees it, guess what? Now you got to fix it, and the appraiser's got to recertify that it was done. So, those are some of the more common things that we see.
Yeah, I think that's really helpful. And I mean, it sounds like a lot of these things, as you said, well, I mean, maybe the outlets or whatever, people, a regular or non-VA buyer might not care, but they might.
If they have young kids, they might. Someone who's a parent of young children would spot that, right? Someone with no children or grown children may not even see it when they're walking through the house, or they might be like, "Oh yeah, we'll take care of that during the deal." Then you get busy and forget about it.
Right, exactly, and it might not matter. But it really does sound like these are sort of reasonable fixes. And so, in terms of termite issues, who has to pay for that? Does the seller have to pay for that, or?
No. So there is no requirement of any party to be the party that pays for it. So anybody can take care of it. The VA doesn't care who does it, financially speaking. They just care that it is done. So, and there was a bulletin put out by the VA recently, a month and a half ago, to add some clarification to this because there was still a lot of confusion. And I know that there has been a lot of confusion about who's allowed to pay for the actual inspection. And there were moments in the past where people would say, well, the veteran is not allowed to pay for that. That was untrue then, and they clarified it and made it even more untrue now. The veteran is allowed to pay for the pest inspection. The veteran is also allowed to pay for the pest repairs. Now, one or both of those may not be common, but common or not, it's allowed. And the seller is not required to pay for either. So just like a home inspection that might happen on a house, and say there's a repair that the buyer wants made on the home, well, the seller doesn't have to do it. But on the VA loan, if it is something that's called out in the pest inspection or the appraisal, it has to be done to close. So somebody has to, which is the difference between like issues that come up on a home inspection. Issues that come up on a home inspection, it could just be finally decided that no one's going to take care of it, and it's just something the new owner is going to have to deal with later. But on these VA related requirements, it's got to be done before closing. So they don't care who pays for it. It just has to get done.
Well, that's really helpful for people to know. So the veteran can pay for it. So in terms of kind of evaluating or not scaring a seller because of a VA loan, potentially a real estate agent could not write into the contract that the seller has to pay to get the clearance, and it can be negotiated when the buyer and seller are negotiating a request for repair, and then they can figure out how to split that difference.
Oh yeah, 100%. And in the last 2 years, as we went through COVID, and it was like a ridiculously crazy buyer's market, we saw many offers going through with some sort of language relating to like, hey, the buyer will take care of some repairs if they're needed, right? Up to maybe $1 amount or whatever. So that was a good way to entice sellers to say, okay, well, you eliminated my fear, my worry, so we're good. We'll take your deal. Now we're seeing kind of the opposite approach because homes are sitting on the market longer and sellers are getting a little frantic and scared that their house may not sell. So now we're seeing kind of the opposite. We're seeing sellers already have a home inspection completed. We're seeing sellers already have a clear termite inspection done by the time the house goes on the market, because there isn't a waiting list of people trying to buy every home in America. Now it's kind of the reverse. So now they're doing it to make their home more appealing and a little more attractive. Like, hey, we already did these things. If you buy our house, it's polished. It's great. There's all these things that are awesome about it, and you don't have to worry about repairs or anything else. Please buy it. Right. So, the tables have turned a little bit on that.
And, I think one of the, and I guess I'm kind of going off on a different topic, but one of the things that I have noticed is that, or one of the statistics that I heard is the average real estate agent, at least in the state of California, has had a license for less than 5 years, or for fewer than 5 years, which means they have not been in a down market. They have only been in an up market. And so I wonder, to what extent do you believe that real estate agents, particularly on the listing side, have developed the required skills to make homes appealing to buyers instead of buyers agents trying to make homes appealing to sellers, or trying to make offers appealing to sellers?
Well, I think, experience comes in a few different forms, right? And length of time with a real estate license does not make you more experienced. I think we've all probably met that person who's been licensed for eons, but maybe does one transaction a year or one every other year, right? So, someone who's licensed for an average of 5 years or less, they may not have much experience because they didn't have many transactions, or shoot, they might be really, really good and have a ton of transactions and know what they're doing. So it's interesting. It'd be an interesting stat to see kind of the same question for people that have been licensed over X number of years too, right? But the I think the amount of listing agents who know how to get that house ready for sale to be appealing to buyers is probably a smaller amount, because if they got their license, let's say 2019 or 2020 timeframe, and then we hit this crazy boom, well, real estate transactions were just falling from the sky. You just had to get a license, say I'm doing it, and like you're gonna get a deal or two easily, right? And then it's gonna sell in a hot second for way over asking price. So all of a sudden you're like the greatest realtor on the planet because you sold this house for 100 grand over asking, and you did 2 or 3 of them in one neighborhood, and you're a rock star. But that doesn't necessarily give you the experience to develop those skills of knowing how to make that house appealing, if that makes sense, right? Because you didn't have to. I mean, you could sell a turd for over asking price, and people were more than willing to pay it. And so now I think it does take, more experience, more skill, and maybe just some more humbleness to ask other maybe more experienced agents in the office or something for their help.
I think that's true. And I guess this is not specifically related to VA loans, but since we started talking about real estate agents, are there things that real estate agents on either side, both the listing side and the buying side, are there things that those agents can do upfront that make your life easier as a loan officer?
Yeah, that's a great question. I never get asked that, hardly ever. So that makes me excited that you were asked that. So yes, there are some things you can do. As a listing agent, knowing, especially in our San Diego market, the chances of you getting an offer that's VA are pretty high given our demographic. So I would say if you're to Google the VA handbook or the VA minimum property requirements and just read it. Most loan officers don't read it, but it would be helpful for a listing agent to read that section of the VA handbook, because now when they take on a listing, they'll have a better idea of what they need to look for when they go walk that seller's home and get it prepared to put on the market. And a lot of the things, like I mentioned, are simple, and the conversation I think is easier for a listing agent to have with the seller before you're on the market and they're stressing about getting offers and foot traffic through open houses and all that stuff. I think the conversation would probably go a little smoother if, hey, we need to go on market with your house soon, but I did notice these few things. I think we should address these couple of items. They're pretty simple, but we're in a big market for military. If we get a VA offer, they're going to get called out. It's going to be a pain in the neck. Let's just deal with it now and get it out of the way. So I think that's something they can do. Something that makes our life easier on the lending side that realtors can do is know the timelines of the transaction, but also understand how you can influence and affect those timelines. And then I would say also your preferred vendors or referral, or your preferred partners, I should say, especially because it's more common for a listing agent to be the one that selects like the title company or the escrow company. And most of us who are either lenders or realtors, are selecting those companies, maybe not necessarily because of the company. We're selecting it more so because of the sales rep that we get to interact with all the time and might be helping us with some different auspices of our business. And so that's how we make the selection for who my title company might be or my escrow company might be when it comes time to sell a house. And what I have found is when we talk about who those players are, and then the previous comment I just made about knowing the timelines, there's a very, very integrated component right there. And what needs to be understood is not only did you pick good companies to deal with, but did you pick companies that can maintain the speed required by the other time frames in your contract? Because what oftentimes I see happen is we have somebody who picked his favorite title company and his favorite escrow company, and we get a contract accepted. So everyone's like, all right, Mr. Lender, go. And we're anxious to go too, but we can't start the process until we're able to communicate with those two entities and get their fees in writing so that we can then have our documents ready to send out to the client. Then the client has to sign them, and then we can officially go on the loan. But where I see a lot of that disconnect is, we'll have an escrow get started, and the escrow company won't answer a phone call or return an email for 3, 4, 5, sometimes 7 days. I've seen it happen.
Wow.
And so we are held back from starting the loan until we get that piece. And all the while, these time frames are ticking away inside the contract. We got to have appraisal ordered, inspections done, the loan contingency, all these things have to happen by a certain date. But what they're missing is that kickoff component. The first domino to fall for the timing of all this is the company they selected, who is now being unresponsive and being slow. And then the pressure gets turned on to the lender, like, well, hey, you're not doing your job. And we have to understand that everybody that's pulled into a real estate transaction has to be functioning as a team, and you can only move as swiftly and as well as the slowest or weakest link in the team, right? So if everybody's an all-star except the escrow company, maybe the rep is really cool, but if the company itself is not an all-star and everyone else is an all-star, then your transaction is not going to go quick because you've got a really slow component right there. So I would say that's something that is super helpful. And having the other thing that's super helpful, which a couple of agents I've been in transactions with do, and it's such a nice thing to have. So if you have an assistant or a TC, or you have the time to put this little framework together, is have everybody's contact info. You don't have to have the sellers and buyers necessarily, but have all the third parties, lender, title, escrow, if there's an HOA, TCs, who the realtors are. Have a contact sheet, just like, hey, here's the listing agent, here's the buyer's agent, here's the listing agent's TC, here's the buyer's agent's TC, here's the escrow person, right? Go through the list. That saves a ton of time and is incredibly helpful, because when we get the purchase agreement on the lending side, oftentimes it doesn't even have the realtor's phone numbers on there, even though there's a line for it. Most of them aren't putting it in there. So, we're supposed to assign the listing agent to be the point of contact to get the appraiser in the door, but we don't have a phone number or an email for him, even though there's a line on the contract for both, right? It happens all the time. And then we don't know, well, who is escrow and title? It just says seller chooses. Well, who did the seller choose? We got to know, So like oftentimes, like, they might seem like silly details, and I know people are not putting it in there because they're trying to be fast, and I can honor the need for speed, but it ends up slowing us down when it really matters, and that's when escrow is open. That's when the speed really matters. So having everything filled out on the contract is good, and having a list of all the people, third parties that are helping put this thing together is really helpful too. There's been many instances where sometimes there's 2 HOAs, which is always a little funky, and sometimes we don't have contact information for one, or we don't have contact information for both. And on the lending side, we have to have that contact info because we got to talk to them and get stuff from them. So, just knowing who everybody is and how to get a hold of everybody is crazy important. And it's super helpful to get that sheet at the beginning. Like, hey, Jason, really excited to be in escrow with you on 123 Maple Street. Wanted to get you out this contact information. Here's everyone that's involved in the transaction. And then at the bottom, I just put our timelines for the deal. Really excited to work with you. I mean, that alone could save us a day.
I think that's really helpful. Also, I do, at least since I'm also an attorney, in addition to being a real estate broker, I definitely understand the value of like actually filling in all of the important parts of a contract and reading the full document to make sure that you understand what's there. Because as I always tell, at least my legal clients, it's kind of like getting married, right? The day before your wedding is like the most you will ever like your spouse, and it seriously goes downhill after that. And it's the same with a transaction. The most you will love the seller the other side is the day before you sign the contract. After this contract is signed, it precipitously goes down from there. And so you want to kind of cross all the T's and dot all the I's and put all of these sort of nasty, mean things that you want to put into the contract while the other side loves you, because you can't do it after.
Exactly. And it's on that point of just completing it. I mean, you'd be surprised how many times we have to go back to one of the agents to get signatures, a missed initialing, and I know it's all DocuSign, but sometimes they miss placing the little marker there, and so you get a DocuSign contract and it's missing initials on the last page or whatever, right? So
Right.
yeah, that thoroughness on the contract. I mean, it sounds mundane and simple, and really it is simple, but it gets brushed over a lot.
Yeah, exactly. Which is, again, really that is the role of an agent, that to fill in the proper blanks. That is at least a part of their job.
Yeah, at least give us names and phone numbers, guys. Names and phone numbers. That'd be really helpful. Then we can take down the signatures if we have to.
Exactly. Yes. Then you can say, "Hey, this thing was missing a signature. We need the signature. Can you please do that?" And I think that's, from the seller side, I think that's actually something that's really helpful too, is when you're interviewing an agent, when you're interviewing a listing agent, particularly, because it is, regardless of what the market looks like, whether it's a quote unquote buyer's market or a quote unquote seller's market, the seller fully controls the transaction, because the seller fully decides whether they want to sell the house or not. Like, a buyer cannot force a seller to sell a house that the seller doesn't want to sell.
True.
So it's really, I mean, legally there are certain ways to make that happen under certain circumstances, but as a practical matter, as a seller, you can set the terms of how you want to sell the house. And it's really important when you're interviewing listing agents to figure out, who are the vendors that these people are using, and are these vendors who can actually get a transaction done? Because, practically speaking, generally the seller is the person who negotiates these things, and there are also practical reasons for that to be the case. But that's something that, as a seller, you need to be aware of, is like, who are the vendors that you're using? What's the relationship? I have seen so many nightmares with title companies, because the title company creates problems. As a seller, you can ask your agent, when do you get a title report? It should be, in a perfect world, it's before you sign the listing agreement, but like, in the real world, it should be after you sign the listing agreement, and the answer should never be after we open escrow. Like,
yeah, and you'd be surprised how many times we get a contract and we get the title company's information. We're like, hey, we need the preliminary title report, closing protection letter, insurance, da da da. And they're like, oh, we don't even have a prelim pulled yet. Wow, like, blows me away. But it happens. Sadly, it does happen.
It is one of the reasons why I get business as a lawyer, so I'm not necessarily going to start discouraging people from doing that. But
income.
But as a practical matter, I will still, get phone calls to fix the title issues before the house is on the market. And, it takes me more hours to get stuff done quickly than getting stuff done on a reasonable timeline.
Always. Yeah, I would agree with you. And on that note of, selecting your partners appropriately, one of the things I've been talking to people a lot about lately is, we just exited the 2021 and the 2020 craziness of real estate, and it was really crazy. So things have cooled down now. They're not as crazy. And I mean, there's still people that are busy, and there's still transactions and homes being sold, and all of that is still taking place, but not at the same volume that it was before. So what that affords everybody is a little more time. And so the conversations that I've been having with a lot of realtors lately is, take advantage of this time right now to reassess those companies who you do refer out, the title company, for example, or the escrow company, or the lender, or the home inspector, the HVAC repair guy, so on and so forth, right? There's a web of people who the realtor really does kind of control the referrals of. And, when when things are going crazy busy, it's hard to like focus a lot of attention on that. But the reality is, all of those people are a reflection of you in the transaction, right? So a bad title company, it can sour the whole. I was in one last summer, and the sales rep is a big, well-known name. The guy in San Diego, nice guy, great salesperson. The title company he works for, really, really not good. And we had a situation on a transaction. We had to extend escrow 60 days because
Yes.
we eventually had to get to the executives at the title company to get things resolved. But anyways, but that's what I mean is, now's the time to really kind of sharpen your tools a little bit and make sure you do have the right people, even though you may really like so-and-so. Is that the right so-and-so for you to be referring out, right? And then beyond that, where I think a lot of value can be created for a team, right? And I would consider that a team. So a realtor has, the group of people who they rep or they refer out, their lender, their title rep, their escrow, and you go down the list. I think right now is really a great opportunity to start getting that entire team together all at once, maybe once a month, and having a little mastermind session. Because, a lot of the relationships and dynamics that I see between lenders and realtors and lenders and title reps and so on and so forth is that everyone is kept very much in their silo, right? Meaning, hey, Jason, you're a lender. So your value to me is only in lending. Even though you might be really, really good at these 4 other things, which I don't know of yet because I haven't spent the time to get to know them, your only value to me is as this lender. Or, hey, title rep, your only value to me is as the title sales rep. Not that you may know X, Y, and Z really, really well, which could ultimately benefit my business or maybe benefit the inspector's business or what have you, right? So by pooling together all the people and spending time getting to know each of them, getting to know what their process is, right? I'm sure if a real estate agent understood my process from when a lead comes through to all the way to closing, if they understood all the steps and what we do on our side and what we provide in the customer service pieces that we include in there and so forth, it might really, really help that realtor when making the referral. Or when the client says, well, why would you recommend Jason? They might go, hey, because of, and now they have a really, really in-depth understanding of why they're doing it. And conversely, if I understood, the real estate agent's process from lead all the way till a closed client and all the little steps in between and how they treat them and what they do and their gifts and all the stuff where they do things. Well, shoot, when I get someone that doesn't have a realtor and they say, hey, I really need somebody who's great at X, I in-depthly know that person's process. So they're going to always be higher in my mindset of someone to refer because I know way more about how they're going to take care of this client than I do another one who might also be really, really, really great, but I don't know enough, right? And beyond that, now once we all collaborate and understand how each of us works and works best and where our strengths lie and everything else, and we get to know each other more, now we find out that, oh, that Jason guy's really good at social media, really good at content, really good at branding. Oh, maybe he could help me with mine since I'm not doing any of that. Oh, you think maybe some more business might come from that? Oh, well, that might be a really good reason to partner with somebody to get more business, right?
Right.
Oh, the title rep, he is really amazing at whatever P&Ls, and my P&L's garbage. Wow, I could have a better bottom line if I let that guy help me out with my P&L? No way. You know what I mean? Like there's all these ancillary skills that each of us possess beyond just the description of our job, where we can completely add value and intrinsically help all the people in that group do more, do better, right? Because now I will know, well, how does it work for an escrow rep? I don't know. Well, what does their process and their steps look like? What are they really good at? Oh my gosh. Like so much more opportunity develops. So I've been, not to be in my soapbox, but that has been my soapbox recently is now's the time to really create that all-star team, that network of yours that reflects you in all your transactions.
Absolutely. I think that's really very valuable advice, and also very valuable advice for sellers, and people who are working with real estate agents, to see you're not just working with the agent, you're working with their team. Um, and with that, I saw that we had a couple of questions. I don't know that we'll have time to get to all of them, but I will at least ask one of them. So I'll be right back with our Ask the Pro on the Show segment. All right. So the one question, so I think this is probably the one question that we may have time for, but I think it's a really interesting one that I had not thought of, which is, what changes do you anticipate coming to the VA loan in the future?
That is a good question. I would think changes coming forward, there might be a little bit more teeth in the debt to income ratio component. In 2020, it went into effect where they removed the loan limit. So theoretically, if you could qualify for zero down payment for a $3 million home, then you could use your VA loan and go zero down, buy a $3 million home. Now that might be stretching debt to income ratios pretty far. And there might be some other compensating factors about the loan file that help get you there. But I could imagine maybe some conversation. Right now, the VA handbook does not mention debt to income ratio. That's up to the lenders and their requirements. I could see maybe something coming forward on that. The other thing I could see coming forward is an expansion of their the VA renovation loan guidelines and terms, and same thing with the VA one-time close construction loan. Those are available, but they're pretty limited in what they will allow you to do. And I could see an opportunity, especially now with the renovation loan and people's affordability index shrinking, would be great opportunity for like a veteran to buy a total fixer upper that's going to need more than 50 grand in renovations to really make the place shine. And right now you're kind of capped around the 50 grand. Some lenders will go more, but there's a bunch of weird caveats. So it's an area of opportunity, I think. So that's something, an area I'd like to see change for sure. You're muted.
Oh, and thank you. I feel like that's a thing that has happened on every single one of my shows. So, you know what? Periodically, that'll just happen. My one question that I have is: do you think that it's likely that? Do you think there are changes coming to the VA loan? Do you think that Do you think that there's a need to change the VA loan, or is it pretty much great the way it is?
They're always refining it and making some changes. So I imagine that we'll see additional changes in the future. Part of that's going to be, I think, the climate, the lending climate that we might be in that phase or that era, to help kind of address or persuade the VA to make certain changes. But I don't know exactly what we'll see. Maybe we will see some changes to entitlement calculations. So people are going to have less limitations on more than one VA loan. We'll see.
Yeah,
but that would be a neat thing.
Yeah, that would be great. All righty. Well, we had a couple of other questions, but we also only have 3 minutes left. So I will just say, Jason, do you have any sort of last words for our viewers before we close out?
The VA loan, that's our topic today. The VA loan is the greatest financing tool that's out there, in my opinion, for residential real estate. And we don't have time to get into it, but there's so many great ways to use that tool that anybody who is representing a client with access to it should absolutely be promoting the heck out of it. It is a great tool. It can be closed very fast, and my record is 10 days on a purchase. It can be closed very fast. the underwriting guidelines are less restrictive, and lenders are incentivized to do them by the VA through their influence on pushing us to make loans happen with VA loans, which is the opposite impact or effect on like conventional loans, where it's like, hey, here's your box. If you don't fit in it, we don't care. On VA, it's like, hey, there isn't really a box, so let's try and make it work for everybody. So it is a different perspective. It's an awesome product, and I would say to anybody who has some worry or fear or is just turned off to the VA loan is, or maybe looks down upon people with a VA loan because they're coming in with zero down payment. It's not because they don't possess money. Some of them don't, but it's not because all of them don't possess money to come in with zero down. It's because they're allowed to not come in with any down payment. And I oftentimes get some resistance to that because people like to see more skin in the game. And my response to that is, their down payment was they volunteered their life so you could sell real estate. That's their down payment. It doesn't have to be dollars. They volunteered to die. That's bigger than money. And so I hope as all of us in the real estate industry move forward and deal with vets and their VA loans and stuff like that, that we can keep that in the back of our heads when seeing a VA loan offer come across the table, that there's no down payment in dollars perhaps, but there was a down payment, a big one.
Well, I think that's a really great close. And if anybody wants to reach out to Jason, I put your contact information up here. Jason Wood, jwood at valoanguy.us, Instagram at valoanguy, valoanguy.us is his website. And if you want to reach out by phone, 760-217-0820. Thank you so much for being with us, Jason. I really appreciate your time. I also really appreciate your sacrifice as since you are a veteran. And I very much understand why you are passionate about the VA loan and helping veterans achieve the dream of home ownership. So I want to really thank you for your time. And I will be back next week with another real estate pro. Bye-bye.